And let's talk about L&T Finance. The company has completed 30 years of operations. How's the business momentum in the near term? What's the broader outlook as well? To help us out with that, we have with us Mr. Sudipta Roy, the Managing Director and CEO of the company. Hi, Mr. Roy. Thanks a lot for joining in.
Thank you.
Congratulations to you as well as the entire team on this achievement.
Thank you.
Let's talk about business. I'm looking at your AUM. It's roughly around 93,000 crores odd. In the near term, what kind of AUM growth are you looking at? If you could break it up between segments and say in the next 3 to 5 years, what kind of a target do you have on the AUM growth front?
Okay, see, as part of, we had initially announced in Q4 FY22 about the Lakshya strategy for L&T Finance in consonance with overall L&T Group Lakshya strategy, where we had said that we would grow at about 25% CAGR, and we've been growing pretty well. In the last 3 years, we have increased our retail book from 45,000 crores out to about close to about 90,000 crores right now. One of the targets that we have taken on ourselves is to try to see if we can double the book in about the next 3.5 to 4 years' time, is what we would like to do. And, if you look at, we are one of those NBFCs which are, if you look at our asset profile,
yes,
we're almost actually 50% rural, 50% urban. And very few sort of NBFCs have this sort of balanced asset profile. And I do believe that, our growth will come equally from urban sectors as well as from rural.
Okay.
Though the urban might outpace rural over the next 3 to 4 years' time. So what I believe is that this urban-rural split might move to 60% urban, 40% rural. And, in rural, as you know, we are the third largest in microfinance. So that business will continue to grow, but probably that business will continue to grow at a little lesser clip than, whatever has been growing in the last 2 to 3 years.
Yes.
However, the urban businesses, especially in home loans, loan against property, SME loans, maybe a little bit of consumer loans like personal loans, two-wheeler loans. We are one of the largest in the country in two-wheeler loans. Most of these urban consumption-driven businesses will continue to grow at a much faster pace. Overall, we are looking at about a 25% growth rate, more or less on a steady-state basis.
Got it. And since you have a fair bit of exposure to the rural as well as urban as of now, 50% apiece, give us your sense. There's a debate out there. Is there pain or there's no pain? Are you seeing stress in the system, particularly in the rural portfolio?
So I'll talk about the industry. Obviously, there is a little bit of a stress, especially in the MFI segment. There is leverage that has built, right? Though I would like to believe that we are one of those lenders who is least impacted by it because of our very prudent lending practices over the last 3 to 4 years, especially in the MFI segment. Yes. But however, there is stress. There are slippages and there are questions around asset quality. However, I do believe that on the back of the good monsoons that we have seen this year, and again, the election was a disruption. It was a 3 to 4 month disruption. And many of the social flows which were there actually went through a hiatus during that period. Majority of the social flows, etc., have started. The monsoon yield has been good. The Kharif crop has been good. We expect the Rabi crop to be very, very good as well. We had a rocking month in tractor disbursements in the month of October. Right. And in that tractor disbursement momentum continues in the month of November. And if you were to correlate tractor demand with sort of rural demand as well, I think the industry will probably see the worst of this crisis maybe, latter part of this quarter, early part of next quarter. Next year, I see normalcy coming back.
When you say crisis,
so
you mean MFI?
MFI.
And how would you, we spoke with a few other players last week. They said, well, fourth quarter should be the peak of MFI stress. Would you agree with that?
I would agree with that.
That is Jan to March?
I would agree with that because the Kharif crop arrivals have been good. We expect the Rabi arrivals to be good as well because the water reservoir levels are at record high after the good monsoons. So if on the back of both of this, the resumption of social flows, etc., I do believe that sometime in the middle of Q4 is when probably.
But would you agree that for NBFCs as a space, again, it's not L&T Finance per se.
Yeah.
RBI has come out, regulation-wise, they've been coming down on various fronts, not just one line of business. Would you say growth? You said you'd like to double your loan book in the next 3 to 4 years.
3.5 to 4 years, yeah.
So there is slight moderation as compared to what you said earlier, which is 25% CAGR, right? Now you're probably between 15 and 20%.
Correct. See, the thing is that, some businesses will grow at a particular speed. Some businesses will probably go at a lesser speed. And again, you calibrate your growth according to the market conditions, right? So obviously, I would not say RBI has been singling out NBFCs. RBI has been generally And the regulator has been generally sort of advocating moderation in certain asset class growth, and it is across the financial industry segment. And I think they are saying that, lend where you think the customer has the capacity to pay, and do not lend beyond the customer's means. And also be transparent with the customer when you lend, and make sure that no AG practices are resorted to while lending. So I guess it's a directional guidance to the entire system. Also, the RBI wants us to be very, very transparent with the customer in terms of pricing, and wants to make pricing more reasonable. Because of all this, obviously the industry will go through a little bit of adjustment phase before the new cadence sort of settles in. And that will lead to maybe, maybe the heady growth that a couple of percentage points might be drawn from there. But I do believe that is good in long-term interest of the industry.
But does that mean, in FY25, does that mean, say, 20% growth for you, or 25%? Will that
It's very difficult to pinpoint whether it's 20 to 25%. We have said that we will be directionally between 20 to 25%, and probably will land up somewhere between those numbers.
In that range, got that. On asset quality, so you're saying that the MFI situation will hopefully resolve itself by the fourth quarter. The other area of concern, which obviously the RBI flagged off this year, was personal loans and things like credit cards, etc., unsecured lending, basically.
Yes.
What are you picking up from the ground on that side of the portfolio? Is there any delinquency building up, any concern building up over there?
See, the prime personal loans portfolio continues to hold well, right? We only saw stress in the below 75,000 rupees ticket size, right? And if you look at the overall distribution of personal loans in the overall industry right now, probably the number will be somewhere between 13.5 to 14 lakhs of personal loans. The below 75,000 segment, I don't think is more than about 1 lakh or 1,25,000, 1.25 lakh crores odd. So it's a small portion of the portfolio that has stress, and large portion of that stress probably has, to a certain extent, flown, or it's stabilizing. In fact, if I look at the data, I think the entire personal loans industry, as well as the consumer finance industry, has shown some signs of stabilization post-September, October. So I do believe that that particular phase is probably over, and the industry is moving towards stabilization.
3.2%, roughly 3.2% is where gross NPAs were for you at the last quarter, percentage. Is that the peak? Does it improve from here on? And again, I'm talking about an outlook for the next couple of quarters, not necessarily just this year end.
See, the fact is that we would our credit cost was roughly about 2.5%, whatever was our credit cost. So the fact is that, because the MFI, and we are a very large player in MFI, right? Yeah. So even if a 10% dilution in collection efficiencies leads to some flows, right? And because there was some flows in the early part of this year, which is between April, May, June, right? Some of those flows will keep on coming and moving into GS3 and NS3, respectively. So more or less, I do believe that the credit cost that we have at that particular level, we try to stabilize it at this particular level, but there might be some 10-15 basis points ups and downs for the next 1 or 2 quarters before it settles down again.
Very quickly, what about NIMs? What should it look like? It came off a little bit on a sequential basis.
Yes, the NIM came off a little bit primarily because, the asset quality, the asset mix actually changed, because we slowed down a little bit of MFI, which is generally a higher yield product. And, overall, your mortgage and LAP portion of our book has gone up. So because of the adjustment in the mix of the input products, the NIMs have moved a bit. But what we have guided is that we will try to keep our NIMs and fees between 10.5 to 11% is what we have guided.
All right, Mr. Roy, we congratulate you once again. This is a landmark milestone in that sense. And congratulations on the event tomorrow as well, right?
Thank you so much. Yeah, we are actually, we have actually retooled our technology team, and we have one of the best teams. We would believe they're one of the best teams in the industry in terms of data science and artificial intelligence. So what we thought was that as part of our 30-year celebration, why not have a conference that looks at AI's applicability to BFSI, real-life use cases, and we have the conference tomorrow. We got very good response, and we hope to have a good outcome tomorrow.
Absolutely. Congratulations and good luck for that event as well. Hope to see you tomorrow.
Thank you so much.
Thank you. Well, that is L&T Finance Management with perspective on the business across different segments.